Hello, ladies and gentlemen. It's Modern Investing on Pod TV. My name is Sasha Star, and let me introduce our guests for today, Dr. Milan Sambarak. Welcome to the show, Milan.
Delighted to be here. Thank you for inviting me.
Always great to have you. And finally, Jim Eid from Eid Foundation. Welcome to the show after a long absence.
Thank you for having me, Sasha. Great to be back.
Great to have you. So you've been in Japan for several weeks now, right?
Yes, I spent most of the day in Japan.
How was your trip?
It was wonderful. I really enjoyed it, and one of the things that I learned, because it was a Stanford-led tour, so we got a lot of lectures and stuff, is that Japan is a very aging society, and there's a lot of resentments about the youngsters having to take care of the oldsters, and they also have a real problem with their national debt. Now, Japan is a very strong economy and shares a lot of values with the United States, and we're allied for strategic defense purposes, and but it's facing many of the same problems that the United States is facing, and even they're further along down the road of running into serious problems. Like, for example, they had restrictions. They wouldn't import rice, so they only grow rice, and so they consume the rice they grow. Yet the young people are going into the urban centers and not growing rice. So what's going to happen? This is it was a fascinating trip from that angle. And also, of course, we got a lecture about China facing many of the same problems. I just saw an article about kids. They stopped the one child policy about 9-10 years ago.
In China.
Yeah, but right. They kids aren't children. Adults aren't having children. So they're running into the same kinds of problems. Japan, China, United States, aging populations.
But you see, U.S. has a great advantage over all these countries because U.S. has Donald Trump. And all those countries, they don't have Trump. So nobody else is going to fix their problems. And believe it or not, next week, Bank of Canada is going to lower interest rates. Have you heard me on that?
Yes.
Right? Yeah, Canada is going.
Long overdue. Good for Canada.
Yeah, well, they're not listening to old brother in the United States, and they're going to venture into lower interest rates. I think, in my opinion, the Federal Reserve feels redundant because all they can do is lower or jack up interest rates. And it seems to me that they feel almost sorry for themselves to being so useless, and they keep high interest rates in hope that there will be a recession. And if there will be a recession, and if they will never lower interest rates and even jack them probably higher, then there will be a recession, in fact. So in that case, they will come forward, they will start lower interest, and they will say, what?
The big heroes.
Wisdom.
In anticipation of lower interest rates, house prices in Canada are starting to go up. That's one thing. And the other thing, Jim was talking about Japan. The Japanese stock market is still at 1/2 of where it was 40 years ago. Will it ever?
No, I think it's recovered, I think it recovered, but recently it went to the level where it was, in fact, 40 years ago. Probably will go higher, but it's not a viable record, that's for sure. And another thing is the United States has something that no other country has. And I'm talking about stock NVIDIA, which it's no longer Magnificent 7, it's Magnificent 6 and NVIDIA. because what NVIDIA does puts to shame all those magnificent six and all S&P 493 stocks really in a garbage category. Look at the market today. What's happened? Everything is red. The Toronto market is in red. Dow Jones, S&P, Nasdaq, the oil, the Bitcoin, everything what is there, it's all in red.
But this isn't a usual Wednesday because we had a holiday.
However, NVIDIA learned its own way. It's up more than 0.5%. It's 0.6%. It's in green.
Yes.
And it's look, because of this upcoming split on June 7th, before I was very cautious, saying that I can see that it's gonna be over $1,000 a share. Now I can clearly see no, it's $2,000 a share, and probably much higher than that, because once it will split, so instead of what is it now, 1,145 a share, so it's gonna be $114 a share. From 114 to 200, it's a matter of few months, maybe if not faster. So
you're a big supporter of NVIDIA, but history shows that individual stock picking is a losing proposition on a long-term basis. Short-term, yes, you can come ahead of the market. So you know that over 90% of investors trail the market, don't equal the market. Over 90% of
maybe 95. I want to tell you something very, very interesting. Yesterday, I was on internet, and I was directed to one financial site where people are exchanging messages, and there are quite a few. There is a Reddit. Probably sometimes you follow that, but there are several others similar. And what I've discovered, to my amusement, is how people discussing how many shares NVIDIA they sold short. And they're bragging that, of course, sooner or later that stock will go down like everything else. I just sold yesterday 200 short NVIDIA at $900. 900, and it's 1145. At what point are you going to cover? You're going to wait until it will go to 2000. So you might as well start your application to become a Uber driver, because that's where you're going to end for sure, because your losses are unimaginable in this case.
There are several reasons why the average investor trails the market. One is picking individual stocks. That tends to be a losing proposition. History shows that in the long run. In the short run, yes. You know that in the short run, NVIDIA manufactures semiconductors or is involved in semiconductors. Somebody else is not manufacturing it for them, but semiconductors, railroads used to have the same role in the late 19th century. They were indestructible, and nobody was going to lose money in railroads. Yet Pennsylvania Central Railroad went bankrupt in the early 60s.
Why?
I'm not sure why. There has to be a reason why. But same thing with automobile companies. In the late 19th century, there were 2,000 automobile manufacturers. It was a glamorous place to be. By 2008, there were 3 left. 2 of them went bankrupt. Ford was the only one that survived. Could you have picked out Ford in the late 19th century? Could you have picked out? So NVIDIA is going to go the same way, because history shows that individual stock picking, people lose money in the market, and the American market has been the best place to invest unless you cherry pick. Yes, there have been stamps, for instance, that have done better than the U.S. market. And there have been violins, and there have been real estate that have done better than the U.S. market. But unless you're cherry picking, the U.S. market has been the best place to invest in over 100 years. And in that environment, over 90% of investors are losers. Hello, why? Well, a couple of reasons, several reasons. One is They pick individual stocks. 2 is they trade actively, which they shouldn't be doing. And 3 is the salaries that go to the top Wall Street bankers. Top Wall Street bankers make in 1 week what top professional people like medical doctors and dentists and architects and so on, the engineers make in 3 years. In 1 week, in 3 years is not a mistake. That's what it is. So
it's no longer the case. They were indeed paid handsome amounts of money when there was a lot of activities in merger and acquisitions.
Yeah,
because they were charging incredible fees, and in fact they deserve that, because if they would come up with a certain way to merge two companies or buy out of one company or another, and it would create some great value. And so one who engineered that and implemented that, somebody, the top manager of JP Morgan maybe, or Goldman Sachs or somebody else, okay, you can understand that. But if all they do is just maintain a market, and actually I wanted to pay your attention to market makers. And market makers is not a viable proposition, because they have to provide markets sometimes to their detriment. And I'll tell you, even like on my situation, where I'm selling incredible puts and calls for incredible premiums of NVIDIA, and I'm talking about like December 20, puts. Let's see, I just sold 1,100 puts just a couple of days ago. So somebody on the other end had to accommodate me, and I don't think that there was any trader sitting at home buying from me this puts. No, it was definitely a market maker. And because I don't think that it's a live market maker, I think a lot of this is automated, and they just simply have to provide the chain of all puts and calls and so on. And sometimes I even don't go by the market. I'm just put in the middle.
Most investors wouldn't know what a market maker does. But the fact is, market makers' compensation is okay. Except privately, they are making billions, and they're making billions from insider information. And when you take a look and to try and find out how frequently they have been fined for making this kind of money, never. So the top market makers are cleaning up, not on their income as stated or as given to them, which is okay.
Milan, let me take out the mystery of market makers, and you will see that it's not how you describe it. Mm-hmm. Market makers have to provide liquidity to the market.
Yeah, that's their
so
job.
They have to buy shares when there are no natural buyers. Like
that's right. That's true.
And they have to provide, they have to sell when there are not enough shares being offered. So they have to somehow balance. The way they are working now, it's more or less computerized, but still, before the computers were in place, and what the computers, they're just replacing live market makers with their trading mechanisms, which were invented by human beings, copying what market makers were doing. Let's take, for example, JP Morgan, market maker of Microsoft. He started a day with 50 million shares of Microsoft and $150 million cash. And the day starts. If there's imbalance and the more people want to buy shares and much less people want to sell shares, so he has to allocate some shares out of its 50 million that he starts a day with to the market to help people to finish or accomplish their trades, and vice versa. If there are no bidders for shares and there are orders to sell, so he has to put his bids to help people to fill their trades. Now, what's happened is at the end of the day, he still has to have on his account 50 million shares of Microsoft, not 51 and not 49. So if he sold more than he had in his allocation, he has to buy off the market additional shares to bring it to the 50 million. Now, sometimes you see quite often that the stocks, especially very liquid stocks, Microsoft, Nvidia, and some others, they are going slightly higher in the last minute of trading. That means some market maker sold more shares that he was allowed to, and he has to fulfill. Because if not, then he will be fired in the next 15 minutes once the market is closed. So he must buy of the market, and that's how the market makers work. It's not a highly they even don't put like their top people, as market makers, because it's a very mundane, very kind of uncreative job if you think about it. But somebody has to do it. So I believe that some of these activities are.
Well, we don't agree on a couple of things. One is the incomes of the top paying investment bankers. Now you mentioned J.P. Morgan.
Yeah.
Is Jamie Dimon the CEO? I think
Yes.
so.
Yes.
Okay. Go ahead and look up right now. Look up what Jamie Dimon's compensation was last year.
Uh, I could do it if I could spare a minute and a half of doing
Yes.
that. But what's the use for me to know his salary? How can I make any money on it? Can I make 50 cents if I would know what's actually his salary? Absolutely not. So the notion that the brokerage houses are making enormous amounts of money, it's not from market making, and it's not insiders
Well,
trading.
I have a question about NVIDIA, and then I have a statement to push
Okay.
back a little bit about what Milan was saying. One was when I was leaving, that they were talking about NVIDIA doing a 10-for-1 split. Is that what's
Yeah,
happening?
on
Okay.
June 7th.
So what they're doing is making it affordable for the average investor to buy it again.
Absolutely.
So they'll get more volume, and it's probably a smart move.
Yeah.
And the other thing is that, yeah, in 50 years, NVIDIA might not be a stock worth owning. It might not exist. But in the immediate horizon, what we've seen is these companies that are behind artificial intelligence, some way of manufacturing it, controlling it, making it useful, making offices more productive. All of these companies have an inside track on the latest and greatest thing. And they're going to be winners and losers. There's lots of people that are putting their money into this, and some of them aren't going to profit. But NVIDIA is. So NVIDIA is going to, there's no way that I look at it and see that it's going to come unglued in the next 5 years. So, I think if your investment horizon is not, buy and hold forever, but buy and hold until something changes, then I think it's still, I'll probably buy it again if it splits. And, I owned it and sold it because I hit my target number. But it went beyond. I can remember when Sasha was laughed at for saying it was going to break 500. And here it is over 1,000. So, these types, and there's a couple of others, Taiwan Semiconductor Manufacturing, Marvel, MRBL. These are well-positioned companies. Now, one of the reasons I was afraid of Taiwan Semiconductor is, what if China takes over Taiwan?
It's a political.
Political, not an economic issue at all. But one of the things that I got on this trip was that it's very unlikely, that China will do that. I think people have been seeing it's a foregone conclusion they will. And but what I learned on this trip was that it's probably not going to happen. And if that's the case, then Taiwan Semiconductor is more attractive to me. But who knows? No one can predict the future with any kind of accuracy. But Russia invading Ukraine and the price that they paid, that sent the message to China. And China has to cross the sea in order to get to Taiwan. So it's going to be quite the undertaking if they want to take over Taiwan. And so all of these things are part of it in enlightened investors taking all of these things into account. And most investors are not enlightened. Many investors chase the talking heads will recommend a stock and they buy it. And this is a recipe for disaster. And this is what I think.
I mentioned previously, I sound like a broken record. David Svensson, who ran the Yale Endowment, the best performing
So
endowment.
bad you cannot invite him here.
Anyway, he said
We
that
would
stock
break him apart.
stock selection and market timing
Yeah.
and no contribution to returns.
Absolutely.
Stock selection, market timing, no contribution to returns. Asset allocation is how individuals can make money.
Yeah, but what is his endowment that he manages? It's staggering. So anybody can make money with that kind of money without taking much risk. I think he's obviously exceptional, and I think that's good advice for somebody who has a large fortune. But if you're trying to build a fortune, then you have to take some risk. And the thing that I emphasize is to be disciplined, and many investors are not.
What kind of risks are you taking if you buy the American economy as a whole, as represented by an exchange traded fund which tracks the S&P 500? And SPY is the best choice because the oldest, the largest.
I totally understand what you're saying, and I think that is really appropriate for many people, because I'm looking at the Dow Jones. Everything's red. The NASDAQ, S&P 500, but they're all at record levels. They're all beyond what I imagined 10 years ago.
Yeah.
So this economy has been booming.
Yeah. Now, when you take inflation into account, the market has not done all that well, really.
Well, the inflation, this is the other thing about the Fed that drives me crazy, is the Fed has a target rate of 2% inflation.
It's never going to happen again in the next 500 years.
What if it was 3%? Then they would be happy. They would be lowering interest rates. And what's the magic in the number 2? There's none. Yeah. So why don't we just say that was historically the goal, but now 3% is the goal. And then the Fed would get out of the way of the economy, lower interest rates, allow startups to borrow money without paying punitive damages with the borrowed money, and they would be able to start up and compete. And this is the essence of if we have high prices, somebody comes in produces it at a lower price, and you have competition, and it drives all the prices down. And the Fed is in the way now. It's trying to create an artificial recession. There's no recession on the immediate horizon unless the Fed creates it by raising interest rates.
Jim, interestingly enough, the only beneficiary of high interest rates is NVIDIA, because its competitors cannot do anything.
Yes.
Compete with NVIDIA, they just can't. NVIDIA is sitting on billions of dollars worth of cash.
And cash is king.
Cash. They already paid dividends, small one, but still. Actually, they increased it just last week. And I'll tell you, when I'm listening to you, Milan, about the all-American market as a whole and so on, I'll tell you an example of what's happened to my fund portfolio. And here is the thing. About a year and 7 months ago, when I've put together this new trading method that I'm using, I decided to allocate $40,000 Canadian to this method of trading and see what's going to happen. Here is the result after a year and 7 months. Last week, I took out my $40,000 Canadian. There is no more money on fund account except house money.
House money, you're playing with it.
House money, okay. And with the house money, my balance after taking out 40,000 initial, my balance is, get ready. It's I think you'll be surprised, but I want to tell you exact figure as it is now. And drum roll. And the figure is it's opening up. It's taking a couple of seconds. It's already there. Okay. $291,000, 447.23. Okay, would I get that my account if I would trade all great American market? You tell me.
Yeah,
In
I
in
think
the long run, you're describing a losing proposition here, Sasha.
I
You
cannot
know,
lose because my $40,000 is taken out. I can break even. If I will lose every penny, what is there, almost $300,000, I will lose it all. I'm break even.
uh, yeah, Sasha, what you're describing here is not something that we could recommend to the average investor.
No, no, you
Yeah,
cannot.
you might well be a market wizard, and you probably are, and you cannot recommend that to the person who is still working for a living. You know, the business of buying an exchange traded fund which tracks the S&P 500 takes almost no time at all.
yes.
It has produced over the last 100 years 6.25% inflation adjusted, and we're supposed to take out 4% to live on, which means we're always ahead. And so if somebody focuses on his actual income to generate and to improve his income, and everybody can do that by focusing on his profession, uh, and then requiring very little time to equal the American market.
You're absolutely right, Milan. And as I always say with you two, you're both right. Because there are, you have to know yourself as an investor, and most investors would be better off doing what Milan suggests. But there are investors out there that use intelligence and discipline to surpass the market, and these people, whether you call them market wizards or not, it's I don't have the return that Sasha has, but I've been very comfortable with my return, and it's partly because I don't try to I try to hit a target number, and then that's when I sell. I don't do it based on news or talking heads or anything like that. I don't pay any attention to that kind of stuff. It's all about the rate of return for me, and I do this systematically by picking sectors that I think are going to be profitable, and and this is where the intelligence comes in. Not everybody has it, to pick the companies that are going to be successful in that sector. Now that's dicey to some extent. That takes a certain amount of risk to some extent, but you can do it. It can be done. These companies that are in whatever sector it is that is all of a sudden burgeoning, and semiconductor stocks were, to me, it was just obvious that semiconductor stocks were going to be, it was a matter of national defense. The CHIPS Act was passed in Biden administration, and so they're trying to manufacture chips in the United States so they don't rely on a foreign ally to give them what they need.
Berkshire Hathaway, Warren Buffett's Berkshire Hathaway has returned a little over 19% annually for over 60 years, unmatched. Recently, Warren Buffett decided that what he's going to leave in his will to his wife will be exactly what we're talking about: buy the U.S. market as a whole by buying SPY, which happens to be one of the best representatives of the S&P 500. And that's what Warren Buffett wants. Now, there are not many Warren Buffetts out there, but that's what he wants to leave his wife with.
Yeah, because his wife isn't interested in tracking stocks. Probably, I'm making an assumption there, but I assume that he's saying, "Oh, she's not going to be paying attention to this. She doesn't like this." But if you do like it, you are interested in it, and you have experience in a track record of success, I'm not going to change the way I trade. Even though I believe in the way that Milan is saying, for the majority of investors, makes more sense than to do it the way that I do it, to do it the way that Sasha does it.
I totally agree with you. I'm not fighting that, because what I'll tell you is, if you are on the right trend and right stock, more so, then regardless what strategy you're using, you're bound to make money. I'll tell you a funny example. My first big investment was in a stock by the name Microstat, at that time trading on Vancouver Stock Exchange, and I started to buy it at 50 cents.
Yeah.
And I've accumulated a very large number of shares. However, what's interesting is that I kept buying as much as I could accumulate any money. I would put all into the stock, and I purchased it at 75 and $1 and at $3 and $4 too. However, my average price was $1.25 and it reached $4.70 in its peak. I sold half of it, and of course, I did very well. However, my brother-in-law, whom I told the story when I came back from Vancouver, he bought at 50 cents some number of shares and sold it at 62 because he achieved his objective. Then he bought back at 72 and sold it at 82. And then he bought it at $1.05, sold it at $1.25, and so on and on. So, and he was making money every time he would do any transaction with that stock. He was making money, but in a very small quantity compared to what I've made on this stock.
Right.
So the same thing here, Jim. You're making good money on, say, same NVIDIA or AMD or some other stocks. The only thing what I'm using, probably what you don't, is that we discussed averaging up. A lot of people averaging down. I'm not doing that. I'm only averaging up. So my last NVIDIA purchase was well over $1,000 a share. I bought
Wow.
I bought at $1,100 a share, but I sold deep into the money covered calls.
Yes.
So I saw the premium for this calls offsetting me. NVIDIA, even if it will go down to $800, which is quite unlikely, but still possible, I'm not going to lose even a penny. But the profitability of that, and because my other shares, the average price is $930, and I bought additional at $1,100. So my average is still nowhere near where NVIDIA is trading today.
The
Covered calls, so that's how it works.
The Vancouver Stock Exchange largely deals in penny stocks. I'm not sure if there is one, a Vancouver Stock Exchange anymore.
No longer. No, there is a Toronto Stock Venture Exchange instead, but that's a different story.
Yeah. So now the huge fines which investment banks budget for, who pays for those? They budget for fines in the millions of dollars. If you put down SEC actions and then put down the name of any bank except Charles Schwab and Warren Buffett, those are the only two large investors or banks that have not had the SEC fine them for something or the other. Who is paying for those millions of dollars which they actually budget for, the way you and I might budget informally for our groceries or for our municipal taxes and so on? Wall Street banks budget for fines in the millions.
And they pass it off to the customer.
Who pays for that?
The customers.
The customers. Can we avoid paying for that? Yes, we can. And so
are you a customer of JP Morgan or Goldman Sachs?
No.
Are you, Jim?
Goldman Sachs, yes.
Yeah, well, I mean, you need them to execute your trades.
So is it possible, Jim, that they will extract some money from your account without your knowledge?
Well, they have to get it from somewhere, and they get it from people, from the 90% of investors who lose money in the market, U.S. market, the best investment out there for over 100 years. Most investors lose money because
I understand something. You don't have account with JP Morgan or Goldman Sachs. Jim has account with Goldman Sachs. How physically it is going to happen that he is going to lose even a penny? Jim, can you tell us?
No, I don't. What they do charge fees, and I think that's what
for portfolio management fees, right?
Right. And this is the kind of thing that I think is more to Milan's point, is that these fees really, for what you get, they're a little bit on the excessive side, but they have to
take it elsewhere, right?
Yeah, and certainly my fund portfolios are not with Goldman.
Yeah, you're talking, Sasha, about buying more as the market goes up, and that's called momentum investing. And
no, it's not. It's averaging up. That's
averaging up. Okay. Some would call momentum investment. Okay, averaging up. And so you're buying more as the market gets more expensive.
Absolutely correct.
Yeah. So this is the same person who's buying more as the market gets expensive. The same person who would drive across town to buy a loaf of bread for a few cents less. Why
Okay.
not?
No. It's not true.
What the market
If
is
I
doing?
bought 4 loaves of bread at 5 cents each, and then the fifth one I bought at $1, what's my average price then?
Let's do the math. You bought 4 loaves of bread,
At 5 cents.
5 cents each,
Okay, it's 20 cents, right?
right?
Plus, I bought another loaf, or to make it easier, not at $1, at 80 cents. So
Okay,
now I have 5 loaves of bread for $1.
right.
20 cents plus 80, $1.
20 cents.
Average price for a loaf of bread is 20 cents, right?
Right. Yeah.
And that at the time when loaf of bread already cost 80 cents each. So am I doing okay with my purchasing of the loaves of bread, or I'm losing money?
Let me ask you this, Asha. Why wouldn't you buy the market as it becomes inexpensive, as it drops? The more it drops, people are running for the door instead of buying bargains. The
No,
higher up it goes, people are jumping on board, but
disagree.
it's expensive.
Disagree. The money, when people averaging down on stocks, the money what they're putting supposedly at the lower price and
You're
their
right. You're right.
advantage, in fact, their money will be dead for a considerable time, because the market has to, before it will go higher, it will at least has to stop going down. And we
Okay,
don't
well,
know what's about.
You're right when you talk about an individual stock. When you talk
No,
about the
S&P is
American
the
market
same
as a whole, you're not right. When you
thing. Same thing. S&P, when it goes down,
buy
there
more,
must be a point when it will stop going down. Whether it's happened in a week time or a month's time, nobody knows, but it will at some point. Then it will stay there for some time to consolidate, to weak stocks, to get stocks out of weak hands, or so on, a little bit trading here and there, and so on. And only then, slowly, several months from the times they dropped, it will start going higher. Maybe at that time, yeah, it makes some sense, maybe start buying, but not before that. So people who are averaging down, they're putting their money for debt for a considerable amount of time.
on individual stocks, you're quite right.
Same
You
thing
can
for
lose
S&P.
more than 100. On a margin account, you can lose more than 100% of your money. Where else can you do that except on Wall Street? More than 100% of your money you can lose. But if you're buying the American market as a whole, yes, empires have a 100% failure rate historically. The failure of the American empire is nowhere visible yet. The 15th century, we talked about this before, the 15th century belonged to Portugal. The 16th century belonged to Spain. The 17th century belonged to Holland. The 18th century belonged to France, and they still think it does. The 19th century belonged to Britain, and the 20th century belonged to the United States. Someday, the United States will also fail. They all do. Empires have a 100% failure rate, but the failure of the American empire is nowhere visible yet. It might not happen in our lifetimes. Certainly, you can't count on it.
So, Milan, this is all historical lecture, which is a very good one. However, we are dealing with a situation where we are trying to manage fund portfolio, which you deny, because what you're saying is that nobody needs fund portfolio.
Nobody needs a fund portfolio.
So I will have to probably give my $300,000 to charity, saying that, I don't need a fund portfolio. I will travel in February. I want to travel to Kuwait, United Arab Emirates, Bahrain, a couple of other countries. There will be a cruise. There will be all 5, sometimes 6 stars hotels and excursions and the best restaurants and business class flight. And you know what? Without fund portfolio, I would start to think, do I throw away $45,000 for all that? No, it's too rich. I should maybe just go on a 3-star.
Whether you recognize it or not, Sasha, you're exceptional. What you're doing here is not something that the average.
But it's also the market. Every person can do exactly what I do. I'm not using some hidden instrument that no one except me can do. It's only I can do. It's only I can sell the puts and calls to NVIDIA to a market maker who will soon will start driving.
Before we hooked up with the tour, we were in Tokyo and we stayed at the Four Seasons with a wonderful view of Mount Fuji. And we did all of that on points. Didn't spend a dime. And, you know, and that was part of travel, accumulating points and, you know, obviously credit card expenses as well. But, you know, I think enjoy life. And this is, you know, this is like the thing. And if you enjoy investing, do it. And if you don't,
absolutely. You know, you only have one life to live, but if you live it right, one is enough.
That's a good one. Okay. With that, I would like to thank you both for today's program. Thank you so much. And have a very successful week of trading. And we'll see you next week, same place, same time. Good luck, everybody.
Thank you. Good to be here.
Thank you both.
Thank you.
Bye-bye.
My pleasure.